Hello, my name is Julien Lyon. I'm a financial analyst and the founder of LPE Research, an independent equity research firm exclusively dedicated to asset managers and specialized on French small caps. Last week, we have been working on the company ABC Arbitrage, and today I'm going to present our first analysis on these stocks. Before I begin, I would like to remind you that this video is not an investment advice, but only an opinion. We do not do any business with ABC Arbitrage and do not hold any long or short position in its shares. Having said that, let's get started. Founded in 1995, ABC Arbitrage is a quantitative hedge fund and a financial services company developing systematic arbitrage strategies on all liquid asset classes worldwide. ABC Arbitrage manages its own capital, which represents more than 150 million euros, and assets from its clients, which represent more than 330 million euros. The company operates two main funds: the Reversion Fund, which applies zero of mean reversions to relationships between major financial indices. This fund is designed to perform in volatile markets. The second fund, the Opportunities Fund, is a diversified and multi-asset fund that aims to be uncorrelated to market movements. The company also works under management mandate for its largest customers. Now, revenue and profit are generated mainly by the gain made by the company on the management of its own invested capital. Over the past 5 years, it has accounted for nearly 90% of revenues. In its third-party asset management activity, ABC Arbitrage only earned management and performance fees, representing on average 2 to 3% of assets under management. On its own equity invested, Arbitrage earned all the gain and profit resulting from its arbitrage, gains that are, by construction, highly correlated to market volatility. To carry out its arbitrage and multiply its profit, the company leveraged its position by 3 or 4. However, the position taken by ABC Arbitrage are very short-term and carefully controlled in terms of risks. Since its inception, the company has never recorded a loss. Another characteristic of ABC Arbitrage is its high return on equity and high dividend. According to our calculation, over the last 10 years, for its own equity invested, ABC Arbitrage has recorded gross gains representing on average more than 11% of return on capital employed, including leverage. This profitability, which has never fallen below 5%, is multiplied by the leverage effect, which allows the company to post high return on equity. After paying salaries and various structural costs, ABC Arbitrage has a net margin close to 50% and an average return on equity of 17%. The company redistributes almost 100% of its profit, that corresponds to 50% of its revenues. Now, let's review its past performance. As we have seen, ABC Arbitrage revenues and profits depend to a large extent on the performance of its own invested capital and on market volatility. Unfortunately, over the last 10 years, quantitative easing policies and central banks' interventions have considerably reduced the risk and volatility of the markets. The VIX index, which after the financial crisis exceeded 20%, was only 15% between 2013 and 2019. In this context, ABC Arbitrage has suffered decline in revenue and profit and had to cut its dividend. The company profit rebounded with the COVID crisis, but the massive intervention of central banks quickly lowered investment fears and volatility. Over the same period, the development of third-party assets under management was also disappointing. Even so, third-party asset management accounts for barely more than 10% of the company revenues. ABC Arbitrage had hoped to develop this activity after the financial crisis of 2009. On the contrary, the company suffered significant outflow from 2012 onward to the decline in market volatility, the deterioration in performance of its fund, and a poorly adapted product offering. From 2015 to 2017, the company simplified its offer and succeeded to increase its asset under management again. Unfortunately, from 2018 and 2020, the company had difficulty to market its fund, which despite respectable performance, was unable to perform as well as a long-only fund driven by rising indices. Now, despite its failure, ABC Arbitrage has set ambitious new targets in asset management, namely to reach 1 billion of assets under management by the end of 2022. These strategy and objectives are intended to increase the company revenue and profit, but also to diversify its source of income and thus reduce the volatility of its results linked to its own capital hedging activity. To do this, ABC Arbitrage has set a new commercial organization, is preparing a new product in cryptocurrencies, and is counting on a critical size effect. At the end, we believe that ABC Arbitrage will achieve its objective, thanks in particular to the stabilization of the equity market that we anticipate. Indeed, if that happens, its fund will appear attractive compared to the long-only funds. Fortunately, we also believe that ABC Arbitrage profit will not increase, and as a consequence, that dividend will remain stable. While we believe in the strong growth of assets under management and related management fees, we have concerns that gains from own invested capital will continue to decline and prevent the company's overall profit from growing. Indeed, we believe that equity indices could stagnate under the effect of a small interest rate increase and lower company earning growth, but also we believe that the market volatility could continue to decline, everything being equal. In fact, central banks are likely to remain very active in the markets. Whatever happens, they will have to ensure that interest rates remain low, so that highly in-debt countries do not find themselves in a critical situation. Now let's have a look to the valuation of ABC Arbitrage. To value ABC Arbitrage, the first thing to do is to compare its multiples to its industry. Both in terms of PE and price to book, ABC Arbitrage show a significant premium. For this year, the comparable companies, Flow Trader and V2 Financial, are trading on PE of 11 and 8 times respectively. ABC Arbitrage has a PE of 19. This premium can be also seen in terms of price to book. ABC Arbitrage is trading at 3 times its book value compared to 2.5 times for its comparable. This premium is mainly explained by the fact that the company distributes 100% of its profit, and therefore posts an exceptional dividend yield of 5.6%. Since the dividend is not expected to decrease, ABC Arbitrage stock is not expecting to fall. However, since earnings are not expecting either to increase, and the company is trading at a premium, ABC Arbitrage stock is not likely to increase either, and thus remain very stable, unless a new crisis arises. There are risk factors: the level of debt in the global system, geopolitical tension between the US and China. If something went wrong, volatility would rise and ABC Arbitrage would benefit from it. In conclusion, ABC Arbitrage represents for us a good insurance option for investors. If everything goes well, the stock will provide good yield and is unlikely to go down. In case of crisis, the market volatility will increase, as well as ABC Arbitrage profit. Its stock could then rise above €8. I hope you have enjoyed this video. If you would like to know more about our opinion, you can contact us in order to order our first analysis pack that includes our presentation, our forecast and valuation model, our stock reputation measurement, and allow you to discuss with me. In the meantime, do not hesitate to subscribe to our YouTube channel or to visit our website at lperesearch.com. Thank you very much and see you soon!